Welcome back to Season 2 of The Core, where we're planting the seeds to financial success. My name is Colten Hibbs. I'm your host and Education Credit Union's Financial Health Coordinator, and today I am joined by Alissa Coffman. Alissa has worked with ECU for almost 8 years now. She attended WT while working at ECU as a part-time teller, then full-time as an administrative assistant, and then worked her way up to the position she has now as assistant branch manager of our Hillside location. She loves what she does because she's passionate about helping others and building relationships with our ECU members, and it's evident. I can say that. Thank you so much for being here, Alissa.
Yeah, absolutely. Thanks for having me.
So today is one of those things that I think we both get to encounter fairly regularly, ways to improve our credit score.
Yes.
Let's dive right on in. What is a credit score and why is it important to have a good one?
Yeah, so a credit score is a prediction of how likely you are to pay back a loan on time based on information in your credit report.
There we go.
So,
I like that.
yeah, it's important to have a good credit score because this is what lenders will look at. And you want a good credit score because your interest rate is going to be based on your credit score. So
right.
The higher your credit score, the lower your interest rate's going to be, the less money you're going to spend on interest.
Absolutely. So whenever I do this in like financial education presentations, I remind people of that time that they went to the store and they were like single digit age and they had, we'll say $10 in their pocket and they found that thing that's $9.99 at the store and they get to the register and they have to lean over to their grown up and go, "Can I have $1 for the tax?"
Right.
And they learned that day that the price is not the price. And whenever we borrow money, I remind them that we always pay it back. And we always pay it back with interest.
Exactly.
The price is never the price. And your credit score determines the price of the item for you. How you borrow and repay money is what determines the overall price of things like cars. Anything you make on a credit card and home purchases really are determined by your credit score.
Exactly. Yeah.
What factors influence a person's credit? If it's so important, it influences all these things. So what influences the credit score and how are they weighted?
I like to think of it as like a pie. So payment history is a big chunk. It's the biggest chunk. So it's 35%. The next one is capacity or amount owed. So that's 30%. The next one is going to be length of credit. So the time that you've had your accounts established, from the credit card you opened when you were 18 to the loan you just got yesterday.
It's the average age of all of those trade lines.
Exactly. So that's 15%. And the next one is going to be your new credit. So the accounts that you just got within the last 12 months, any new inquiries that you have.
And inquiries are where a lot of people get tripped up because inquiries aren't just like going to the car lot and having that person ask, "Can we check your credit really quickly?" It's also like when you're just hanging out maybe at Best Buy or checking out at Kohl's and they ask you, "Do you want to open a store credit card?" You don't have to even be approved. You just need to apply. You can save 20% on your purchase today. They're going to hit your credit,
Exactly.
right? There we go. So that's an inquiry and that's part of the credit score.
Right. And then the last 10% is going to be a mix of credit. So your auto loans, your home loans, your retail cards, your major credit cards, that type of thing.
How well you handle sort of different kinds of debt, because a credit card purchase is different than a card payment, right?
Yeah. Exactly.
And then now amount owed, that's where I've seen, and I'm sure as a financial counselor you've seen too, people can have really great payment history. They can have had credit for a really long time. They have a great average length of credit history, but they kind of keep their balances maxed out. And maybe that's the influencing factor in their credit scores, where even if they always make their payments on time, and even if they've had credit for a while and always make their payments on different kinds of debt, it's that how much you have in there, how much you owe somebody else can really impact what your credit score is.
Yes.
And all of those things they're not how much you have in your savings account. They're not how much you spend on like groceries or anything like that. This is just how you've borrowed and repaid money historically over time, right?
Yep, exactly.
And so how does credit utilization, in determining a credit score, how can individuals manage it effectively? When we talk about maxing out, how can people better manage how much they owe?
Yeah. So a good rule of thumb is you want to try to keep your balances below 30% of what your total limit is. So if you add up all your total credit card limits up, that's your total capacity. So you want to try to keep your total balance of what is owed below 30%. And that's going to create your total capacity of what's owed. So try to keep everything below 30% because your credit score can go down approximately 1 point for every percentage owed. So just the good rule of thumb is 30%.
That is good to know. 1 point for every percentage owed.
Exactly.
That's easy math.
Yeah.
Like, what are some common misconceptions about credit scores? I know I've heard them. I get some strange questions, and there's no dumb question, but it's like, oh, I really wonder where you got that information.
Yeah.
So what are some common ones that you've heard?
Yeah, well, I would like to say, how you talked about retail cards like Best Buy. They say, well, get the 20% off, apply for a card. You think that you're just going to get a card. No, they're going to hit your credit. They are going to do a hard inquiry on your credit, whether you think so or not. So that can really take a toll on your credit. And then the more inquiries you have, your credit is going to take a dip every time that you do have a hard inquiry on your credit.
Absolutely. So yeah, those misconceptions of like, it's not just that store that's checking you out or anything like that is... One of mine is, I think there are really great tools out there, especially in the modern digital landscape, for people to sort of manage their own finances and people who want non-traditional paths to building or establishing credit, rather than taking on a loan or opening a credit card. Like, days of yesteryear, there are different products and services that are currently being offered on a wide variety of channels. The thing that I've had to sort of remind people of is that no matter how you get that first car loan or how you get that non-traditional loan product, even if it's a home, once you have it, you're engaging then in the traditional credit system that all banks and credit unions and financial institutions participate in. You're building then, from that time, a normal credit score. Yes. And those non-traditional methods of getting into that first loan no longer impact that score, correct?
Correct.
I just wanted somebody else to say it because I'm tired of saying it. All right.
Yes.
So I love the options available, and I love that that's an opening path. But then once you have it, so knowing how credit works and knowing how the system works is still important, even if you're pursuing those non-traditional paths.
Exactly.
Now, how does a person check their credit report? Because every time it's checked, apparently, they're going to check your credit. So how often can we check our credit reports, and how often should we?
So you can get a free credit report every 12 months from annualcreditreport.com. Yes. Of course, anytime you apply for a loan, you can ask for your credit report. We can print that off for you in branch if you're doing it with ECU. And you can also download the apps like Experian, even Credit Karma. I know those scores cannot be completely accurate, but it can show like a synopsis of your accounts that you have.
Yes.
You can verify your information, make sure that all of that's correct, and make sure those inquiries and accounts are yours.
Exactly. Like, did you actually go car shopping here? Hey, this is your name, but you never lived at this address. Credit Karma, even though the score might not be 100% what your financial institution would use, it's still really a great tool for recognizing when your information is being used.
And it even gives you like an alert, like, hey, your credit was pulled, and
that is a really excellent feature.
Gives you a good idea of if that was you or not.
Yes.
Yeah.
So say we checked our credit. Say, all right, we do the annualcreditreport.com thing, which we encourage our members to come into counseling. Whenever if they're looking to repair their credit, we give them that link on our website on our request form to you can go and check and pull it yourself. So if we pull it and it's low, how do we begin improving it?
So you can start repairing it, getting that score to go up, referring back to that pie. 35% of your score is your payment history. Start making your payments on time. Start paying down your credit cards, another 30%, lowering your credit card balances. It's all about thinking of that pie and what the biggest chunk of your score
and where your biggest problems are. Yeah.
Exactly.
So if your payment history is really what's tanking your score, then, meeting with the counselor to seeing like, hey, how can we restructure? Can we call these places and reschedule? Are you eligible for something like a debt consolidation, with what you're trying to do?
Do we need a budget somewhere else to make sure you can afford your loans? Right?
Yes. Do you have a budget that that you can live with? Because people always think about budgeting as cutting corners, and it's really just reallocating to where you don't have to always cut corners. You're just living sort of comfortably in what you have.
Yes.
Are there quick fixes or shortcuts to I know we talk about budgeting and we talk but this does seem like a process. So are there quick fixes to hey, if I do this, my credit score will jump 20 points in a month? Is that a thing?
So you can pay down your cards, of course, and make your payments on time, but building credit takes time. It doesn't happen overnight. So there's no necessarily not any quick fixes to helping your credit. Exactly. It takes time and patience is key. And I would say, especially the traditional route, I would say, paying off your debts, which that's sort of what debt consolidation can do. But, unless
like what solves everyone's problems? Money. So if you come into a lot of money and pay off your debts, then yes, your credit score can dramatically improve.
Right.
But if your financial situation is going to stay the same, then yeah, it's just going to take time and effort, right?
Well, and usually it takes a couple months to reflect on your credit anyways.
Anyway, yeah, 6 to 8 weeks. So even if you paid off everything, it's going to take a couple of months for it to show up. Are there any credit building products or programs that ECU offers that people should consider?
Yeah, so we offer a Shared Secure Extra Credit line of credit where members can bring in their own money that they borrow against. And we use it as collateral. So that's their collateral. They're guaranteed the loan that they borrow against. And it reports to the credit bureaus essentially as a revolving line of credit. So they're going to use it just like a credit card without the card.
Yes.
They're going to borrow against it. And it's going to be used just like a credit card. They're going to transfer money to their account. They're going to use it just like they would any other account. So,
and if they don't use more than 30%, keep that borrowing less.
Their score's going to go
and
up.
Pay it off every month. Then yeah, your score goes up, not necessarily 20 points, but a couple points every month. Yeah, that's not it. That is sort of a quick way and a nice beginner option. What are some strategies for maintaining a good grade? So you did the work, you've climbed the mountain. Now you're here. How do we stay here? How do we keep that good credit score?
I mean, you need to follow the same steps you took to get your score where it is. Keep the same strategy.
I was about to say, you've built these habits, you've climbed the mountain. So now that you're here, you just have to maintain. Yes, don't overborrow whenever you need to borrow. Pay it off as quickly as you can.
Only open new accounts when necessary.
When necessary. And closing old accounts. I used to... My mother battled with MasterCard for 8 years. And I remember that last phone call that she had with them, paying them off and closing her account. It was very colorful. But it was, now as an adult in my profession, looking back, I'm like, you should have kept that open. You got to cut up the card. You got to told them where the sun don't shine. Yes, just keep that length of credit history there. Keep that capacity open. Yeah. Can you share any success stories of individuals who have significantly improved their credit scores with ECU?
So I had someone come in with no credit at all. In the week before, she had a family member come in and get this type of loan. And she was super excited because her family member was excited. So she came in and she had no credit. She was in her mid-20s and she had a goal of wanting to buy her dream car. And so I was like, okay, well, we'll get you set up with a Shared Secure Extra Credit line of credit. And so I talked her through the process, of course, going through where you have to put $500 down and you'll borrow against your own money. And so we went over through all the steps with her, and she took out where she would only borrow $50 against it.
Yes.
She kept her way below 30% of her balance, but she borrowed $50 against it each month for gas money, and she paid it back before her due date. And within 6 months, her credit went from 0 to the mid 700s.
There it is.
Yep. I kept track of it every month, waiting to see if I could see what her credit score was. And
that's really all we need to see. And that's a credit score that she can take and do other loan products. And obviously she's, that's it. That's it's easy as it can be. No need to overborrow, no need to overextend, just a practical application of the principles. Alissa, thank you so much for your time with us today.
Absolutely.
I think we both learned so much. I mean, and it's just always nice, getting that reinforcement, somebody else besides me saying it. Thank you. But yes, thank you so much for joining us, and you've been so insightful.
Yeah, thanks for having me.
We also appreciate you, our wonderful audience, for tuning in. Don't forget, you can catch the latest episodes every other Wednesday on YouTube or Spotify. And with that, we'll see you next time on The Core.